It's Marshall. He's saying, I'm 62, debt-free with an emergency fund, plus savings. My wife and I have extra money to invest. Can you explain why ETFs and mutual funds are more hands-off than a regular investment account? Because of my schedule, my time's limited, and I'm leaning towards the Timothy asset allocation. If I adopt the Timothy plan, what's the difference between buying through Timothy or Fidelity?
At Financial Issues Stewardship Ministry, our mission is twofold. Number one, to help you defund darkness by investing in a biblically responsible way where you avoid companies that would use the money that you have invested to support an unholy agenda. So Timothy Plan is the pioneer in the industry. They were the first mutual fund company created solely to do biblically responsible investing. And they kind of created the whole platform. They created the very first screening tool, and they are just really good at what they do. So whenever we have two different types of models that you can follow when you become a partner. You can find information about that at financialissues.org. But we give you some asset allocation models, and then we give you a buy list of recommended securities that you can use to fill out that asset allocation. So how to choose between the investment strategy and the fund ETF strategy? Well, it all has to do with your skill level, your time to devote to the building of the portfolio. So when you buy mutual funds and ETFs, you are essentially hiring someone to make those individual choices for you. So a mutual fund is where investors all pool their money together. A professional manager is hired, so someone like the Timothy Plan, and they have different funds that they can offer. Each of the different funds has a different objective. So if you're wanting fixed income, you buy the fixed income fund. If you're wanting small caps, you buy a small cap fund, international, so on and so forth. So each of these funds has a set of rules that the managers have to follow in order to select securities for those mutual funds and or ETFs. ETFs are just a little bit different. Most of the ETFs have passive management, which means that they're not making decisions on a day-to-day basis. They have a stated strategy that gets implemented and rebalanced over time. So the investment strategy does include a few of the Timothy ETFs and mutual funds, but it's mostly made up of individual securities that you choose off of the buy list that we provide for you as a partner. So there is more work involved in building your own portfolio. So if you don't have the time to invest, maybe you don't have the interest, maybe you start looking at it and you think, well, you know, we provide a lot of help. We give you the big picture, the asset allocation. We give you a list of stocks that you can buy from, but there's still a part of the strategy that is a do-it-yourself component to it. So if you don't have the time, the interest, or maybe the skill level to do that, then you should choose that Timothy model. And the difference between buying through directly from Timothy or through a discount brokerage platform is that if you buy through Timothy, they are just a mutual fund company. So you're only able to buy their mutual funds. ETFs trade as stocks. So if you wanted to include ETFs or individual stocks, then you would have to find a discount brokerage platform to trade on.